Hello there, entrepreneurs, and welcome to another episode of the Ndalama Insights Business Show with me, Mukonki Mukonkela. In today's video, I want to talk about why your net profit is not the same thing as the cash at bank. Let's get started. If you produce financial reports, especially the profit and loss report or the income statement, you might have noticed that your net profit, the profit that is showing on your accounts, is not the same thing as the cash that is sitting in your bank. Why is there this difference? Many people are really concerned, especially those that are not accountants or don't have a background in accounting. They are really worried as to why is it that the accountant is showing me a net profit of 10,000, but I only have 3,000 kwacha sitting in my bank account. Why do we have this difference? Well, this difference is because of two accounting principles that I want to talk about in today's video. The first principle that you need to be aware of is referred to as the accruals principle. The accruals principle is an accounting concept that states that transactions in a business are recognized in the period in which they occur and not when cash is received or paid. That is the accruals principle. This is the principle that is the culprit. It's the reason why your profit is very different from what's sitting at your bank. Now, let me give you an example for you to understand this. Supposing you are an entrepreneur and you sell desks. Today is 2nd December. Assuming that a customer came into your shop today and bought a desk for 2,000 kwacha, but they don't have cash right now and they tell you that I'm going to pay next month in January on the 2nd. How will you recognize this transaction? Think about it. Under the accruals concept, you are going to recognize this sale today. In your profit and loss account, you recognize this sale today. So you are going to show sales as 2,000 kwacha. Now, you have not received cash. So how do you recognize the sale? And remember, when you recognize this sale today as 2,000 kwacha, there's no money at the bank. Your bank, assuming you're starting with a zero balance, is zero. So you are recognizing a sale of 2,000 kwacha and cash at the bank of zero. Let's assume that you spent 500 kwacha to make that stable. Your net profit is going to be showing as 1,500 kwacha. Meanwhile, your cash at the bank is still zero. The other accounting method that you need to be aware of is the cash basis of accounting. This is a straightforward method because you recognize a sale and cash when you receive it. So, if in our example, you sold the desk today, but you are receiving cash in January, it means that you will not recognize the 2,000 as the sale today in December. You will recognize the sale next month in January when you actually receive the cash. That is the cash basis of accounting. Now, this is the reason why you have a discrepancy between your net profit that the accountant shows you at the month end or at the year end compared to the cash sitting at your bank. The accruals concept is also applied when it comes to expenditure. So let's go back to the example of this table. The expenses that you incurred in manufacturing this table, let's say you had incurred these expenses in November. These expenses will not be recognized as expenditure in November. Rather, they will be recognized as expenditure the time you sell this table, which is in December. Now, this principle is referred to as the matching principle. It is matching the revenue to the expenditure. You might ask, so what happens when we spend money on manufacturing this table? What happens to the direct cost? That's a very good question, and it definitely requires a detailed video to explain it. But your simple answer is all the direct costs that you've incurred in manufacturing this table are recognized as an asset sitting on another financial report referred to as the balance sheet. And then the day you are going to sell that table, we are going to recognize that cost sitting on the balance sheet under inventory as a direct cost now coming into your income statement. I will produce a detailed video one day on this topic. So the accruals concept, together with the matching principle, are the accounting concepts that result in the net profit being different from your cash sitting at the bank. And should you be worried about this? No, you shouldn't, because this is merely a timing difference issue. It's not that your profit and the cash are two different things. It is because of the timing difference between when you recognize a transaction as a sale or an expense and when cash actually leaves your business or comes into your business. Otherwise, over a period of time, these timing differences should reconcile. And that is why we actually have the cash flow statement to help us reconcile our net profit to the cash sitting at the bank. I hope you learned a few things from today's video. If you have any questions, please leave them in the comment section below and I will respond to you as soon as I can. Thank you so much, and if you found value in today's video, please consider subscribing to my channel, share and like, and yeah, see you next time.